the Fed does kind of come along and say, yeah, we're still planning on cutting rates, delivers a kind of a down the middle type approach, I wouldn't be surprised to see this market try to move on up here back above the 50-day moving average over the next couple of weeks. Let's talk about what you need to know before the bell this morning. Futures are down just a little bit. NASDAQ futures down about 13 points right now. So again, not a lot. We've had two really good days in the markets. We had this, kind of 6 days of just exacerbated selling that went on, took us down to the 100-day moving average. And you'll remember, as we talked about earlier, back in March, we talked specifically about this market was getting very elevated, it's getting very extended. And what was driving this market up was the fact that sellers live higher. And we discussed the fact that in order to drive prices higher, you get to the point where sellers go, I don't really want to sell my position. And buyers go, well, I'll pay you more for it. And sellers go, okay, fine, I'll sell it. Right? So sellers always live higher. So that's what drags prices higher. And we said the problem is that if there was something that triggered selling in the markets, that buyers lived a good bit lower, and buyers were living somewhere right around 5,100-ish, 5,000-ish on the index. That's where the volume gap was. So again, very quickly, when the market opened up on sell decline, those buyers were like, yeah, we'll buy from you, but it's going to be down here. And so there was a lot of sellers that all of a sudden emerged that said, hey, I want to get out at these higher prices. So they all wanted to sell. At the same time, buyers said, fine, I'll buy it, but I'm down here. And so markets went down to that level where there was good buying support, lots of volume previously there. That was the 100-day moving average. Since then, we've had a bit of buying here. It's taken us back to the 20-day moving average. In fact, we closed above the 20-day moving average yesterday. So all that's good right now, but we're really challenging this 50-day moving average currently, which is the big test, and we're probably going to probably fail that today. I wouldn't be surprised to see this market pull back a little bit ahead of the Fed meeting tomorrow. I'm not expecting anything from the Fed other than just kind of the reiteration of what they've been saying. But if they say something that's perceived much more hawkish than not, we can certainly come back down and try to retest that 100-day moving average. That is certainly possible. But if the Fed does kind of come along and say, yeah, we're still planning on cutting rates, delivers a kind of a down the middle type approach, I wouldn't be surprised to see this market try to move on up here back above the 50-day moving average over the next couple of weeks. Again, we're very close to a MACD buy signal. We're not overbought yet. So again, there's potential here for this market to kind of move up a little bit higher. And then as we'll talk about, we're very close to that buyback window opening back up after this week. But good earnings from AMD or Amazon today, Apple on Thursday, could certainly lift this market higher. Again, this market is solely about earnings right now, at least for this week. And of course, the Fed meeting on Wednesday. So, all right, that's what you need to know before the bell this morning.